Hello, everyone. Today on The Final Bar, I'm excited to talk to Leslie Jouflas of Trading Live Online here in our studio in Redmond, Washington. We'll talk about some of the potential mean reversion we're seeing. Stocks like energy space bouncing a little bit to the upside, materials as well. Ladies and gentlemen, this is The Final Bar. Hello, everyone. Welcome to The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the action in the markets using the best practices of technical analysis. The technical toolkit I learned a couple years ago, and is all about investor psychology, all about getting inside the head of other investors. And I learned there was a toolkit to help you understand investor behavior, investor sentiment, and what was motivating buyers and sellers, and particularly how we can measure that motivation. I was completely hooked. And to this day, we use the technical toolkit among many in the industry to focus on trends and momentum, on breadth and sentiment. If you like 2023, if you like the idea that the market is moving higher, driven by the biggest names in technology and communication services, you probably enjoyed today just like any other in 2023, because we've seen more of the same. That gap between the top performing stocks and the stocks not looking so much like Nvidia and Apple and Microsoft continues to spread. Names like Meta, Amazon continuing to push to the upside, having nice swings higher and continuing to press to the long side or press to the upside. Other areas of the markets have been struggling. We've been talking about the pullback in gold stocks, other materials. We've been talking about energy. One of my conversations last week with Doug Bush focused on the energy space. We're seeing a bit of a bounce in some of those names. We're going to look at those charts here in a few moments as we get to our market recap. Let's look at what happened in the S&P, the NASDAQ. Again, another nice up day. Bit of a pullback in the last hour of trading, but overall, the bullish damage had been done. The S&P closing the day just above 4220. That's up about 1% from yesterday's close. The NASDAQ composite even higher, actually up about 1.3% from yesterday, and that's putting the NASDAQ composite to 13,100. Mid caps and small caps both up as well, about the same as the S&P, about 0.8, 0.9%. The VIX pushing lower, and the VIX is pushing actually a lot lower today. The VIX is below 16. It's down to about 15.8. That's a full 2 points down from where we were yesterday in sort of the upper 17. So we're sort of continuing to see this environment of mega cap growth stocks doing the lion's share of the gains, volatility remaining fairly low, a lot more like 2021 than 2022 when you think about the volatility regime. And overall, this market may end its raging uptrend at some point, but not today. Let's look elsewhere at some of the different asset classes we track here. Interest rates overall all moving lower. So the 10-year yield around 361, 30-year yield around 383. That's down quite a bit from 4%, which is where we were last week on the long bond, and the 10-year yield certainly higher than current levels. So we're seeing bond prices rally just a bit as rates are coming down. The dollar index actually moving down by about 1.2%. That's using the UUP. That's one of the worst days for the dollar we've seen actually quite some time. Dollar's been on a nice swing higher, or certainly was in the month of May. Looking at commodities, a lot of green here. Some of the energy ETFs down a little bit, like natural gas, but commodities as measured by gold and silver doing just fine. The GLD up 0.8%, silver prices up 1.6%. Energy working a little bit if you're looking at crude oil prices, and the DBC was up 1.6% today. Finally, looking at cryptos, a little bit mixed, but overall more negative than positive. Ethereum, not too much different from yesterday, down about 0.1%. Bitcoin is actually pushing below 27,000. That might be important. That level is one we've talked about many times. We're now sort of at the lower end of the range we've been for a little bit. But what's interesting about the chart of Bitcoin and Ethereum and others is they're not really moving up anymore, but they're not really breaking down, right? They're not in sort of either camp. I would say when I think about cryptocurrencies, sort of broadly speaking, when I'm looking at bond prices, I'm thinking more sideways than directionally up or down. And I think that tells you a little bit or a lot about the current market environment that we're in. Real quickly on sectors, just to point out, communication services, the top performer. When I'm looking at names like Meta, making new swing highs yet again today, that's what's driving the XLC up by about 1.3%. That ETF dominated by two stocks, which make up about 50% of the weighting in the XLC. Materials number 2 and industrials number 3, followed by energy. All of those up 1.2 to 1.3%, which is a decent update, particularly for things like energy, materials, industrials, which have been beaten down. They're actually pushing back to the upside. Some defense in the form of utilities, staples, and real estate at the bottom of the list here. And utilities having the worst day of them all, down about 0.7% from yesterday's close. A daily chart of the S&P 500. Let's just check in on where we're at now relative to where we've been. Again, a nice follow through to the upside after pulling back the last 2 days, right? If you think about today's Thursday session, on Tuesdays, we gapped higher and traded lower right back to 4,200. That was an important day when you're thinking about the ability of the major benchmarks to not just trade up to resistance, but through resistance. A gap higher that finished lower is not giving you a lot of confidence for that. Yesterday, we further pulled back below 4,200. Today, finally, we're back to the upside, 4,221. So my question, again, still an open question for the S&P. Can we actually get a follow through, which means we close through 4,200 and then continue on? And that's what we've been unable to do since, pretty much since forever, certainly since retesting the February highs in April and again in May. We've just not been able to get a foothold above that level. And again, that tells you about sort of the choppy, uncertain market conditions we're seeing right now. But for now, nice update for the S&P. The RSI is right at 60 and pushing above 4,200, pushing above this level on the RSI, I think would give further weight to the bullish thesis. Now, having said that, before you go jotting down Dave super bullish and put the date on it or anything, let's not get too excited, because overall, I think there are a lot of things to be concerned about. Again, you will never find me happy or super bulled up when the market is moving higher and the breadth conditions are going so clearly to the downside. That may end up being wrong. And what's happened is the market's rallied despite weak breadth conditions and has not weakened because of the weakening breadth conditions. That could change at some point. And what I've learned is to follow the advanced decline data very closely, because that tells you a lot about what's happening underneath the hood. And if you look at the advanced decline line for the New York Stock Exchange, if you look at the advanced decline line even for the S&P 500, look at what happened through the month of May as the S&P is making a new swing high on June 1st, and the advanced decline line on that same list of stocks is actually trending downwards. The small cap 80 line today made a new low for the year, actually really, really close. I think it actually did. It just got below the low from the beginning of January. So while the S&P is breaking above 4,200, you actually have a breakdown in the small cap advanced decline line. Now, again, the market can rally without some of these things leading. I struggle to buy into the longevity or the sustainability of a bullish phase when you have the breadth data so negative. We've covered this in a number of different ways, but just a striking contrast today. I was doing the monthly chart review for my Market Misbehavior Premium members earlier this morning, and we focused on this dispersion or this differentiation between major benchmarks focused on large cap growth and any sort of breadth conditions, which pretty much across the board are negative and or trending downwards. Let's talk a little bit about the leadership. And just to remind you, I'll have to bring it up. I feel like I'm contractually required to point out Netflix did indeed make a new high today, a new high for the year, up another 2%. That's not necessarily newsworthy, right? We're powering above the February peaks. Meta in a very similar condition. A lot of other mega cap names doing that same thing. We're continuing to push to the upside. And the reason why I think that's valuable is because I was taught to identify trends, to follow those trends, and then anticipate when the trends are exhausted. That is the 3-point process that those are my 3 goals as a trend follower on any given day. I would say the signal you're getting from the charts of Netflix and others is that the uptrend is pretty healthy. We had that pullback February and March. We've made a higher low in April and May, and now we're making a new swing high. Stocks making new 3-month highs. As long as they continue to do that, the trend is positive by definition, and that's what we're seeing on some of these leadership areas of the market. What about some of the beaten down names, some of the names that have not been performing particularly well? And I'm looking at SLB, Halliburton, mostly in the energy sector, the types of names that immediately come to mind. What's interesting about these charts, today they actually had a nice update. SLB was up 5% today. Halliburton with a nice update as well. That was up Whoops, that's the wrong ticker. All of these names in this in the energy sector, many of them having a nice day. Halliburton up about 4.7%. On all of these charts, you'll note what's called a bullish momentum divergence. Look at the low in March. Look at the lower low in May. Not all of them have this exact pattern, but many of them have this downtrend of new lows in March going into April. Look at the momentum over that same period. Oversold in March, not oversold in May. That's called a bullish momentum divergence. Well, it doesn't necessarily say we're going to go to the moon. It often indicates the exhaustion of a downtrend, and that's the pattern I'm seeing in a lot of the energy sector. And that makes me start to think my conversation last week with Doug Bush may have been pretty well timed, because we were talking about a potential rotation, where to find opportunities, and if we get a mean reversion and some renewed strength in energy. You're certainly seeing that today. I think that's an open question going forward. You know, a headline on one of the news outlets talked about the regional banks and saying, you know, nice, showing a sign of strength, up 2% today. I can't deny that they are up 2%. That's totally fair. But what I love about charting is it puts a day like today into proper perspective. If you just look at a list of data and you see regional banks up 2%, you're probably immediately thinking, that's probably pretty encouraging, right? The fact that it's up 2%, not down 2%, you're right. Given the choice, you're probably correct. However, what charts let you do is put today's move into proper context. When you do that, I would say you're hard-pressed from a technical perspective to find a lot to be really excited about in terms of a full, complete rotation. Now, there are some things that could be interesting. For example, you have that same bullish momentum divergence we saw with energy. We're trading up to the 50-day moving average. We're putting in some higher lows. So we found a low around 36, sort of a double bottom in May. We made a higher low at the end of last month, and now popping higher so far. But is that enough to confirm that the trend is now turning higher? That is what I would argue we've not seen yet with a chart like KRE, but look for that. And that's a great opportunity, by the way, to use our alert engine to tell you when it breaks above moving average resistance. We'll have to leave it here with cruise lines. Cruise lines, some of the top performing names in the S&P. CCL, Carnival Corp, up about 5.5% today. Not as excited about this one yet, because it's testing its February high, but not getting above there yet. Getting above $12 could be pretty meaningful. But look in that same group, something like RCL has already broken above the February highs. Is this a sign of further strength to come? Folks, let's take a quick commercial break. We'll be back with Leslie Jouflas of Trading Live Online here in our studio. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We so appreciate you joining us every weekday after the close for our show. I'm going to bring on today's guest, Leslie Jouflas, here in a few moments. Before we get there, I'd love to invite you to send your questions our way. Our email is thefinalbar@StockCharts.com. We're on Twitter @FinalBarSCTV. We're on YouTube. Go ahead and subscribe to our StockCharts TV YouTube channel. Check out all the great content. Put a comment below the question you're watching. We'll monitor those, bring those questions to the mailbag as well. Just to let you know about the upcoming schedule, super excited tomorrow that I am off from the show, heading out of town, but Jay Woods from Freedom Capital Markets is going to be joining us live from the floor of the New York Stock Exchange, hosting the show remotely. He is actually going to be answering some of your questions from the mailbag. So if you have great questions for Jay, send them in. Next week, we have some great guests we're working on, including Adam Turnquist from LPL Financial. Look forward to some more great conversations next week. I would like to welcome on today's guest, Leslie Jouflas. Leslie's the founder of Trading Live Online here in town, locally in the Seattle area. Leslie, welcome back to StockCharts TV.
Thanks, Dave. It's just a pleasure to be here in the studios.
Thank you, and it's great to see you here in person. Last time I saw you, I think here was in ChartCon 2022
yeah.
At the end of last year, which was still a very memorable event with a lot of really good conversations and stuff. And I know you do a great job with your Daily Five and bringing some of your perspective to the viewers. I'd love to bring in some of your thoughts on the current market environment. We've talked about the S&P, the major averages. You know, the S&P testing resistance at 4,200, having a nice up day yet again today. We're looking at your chart of the S&P. Talk us through this and what it tells you about the current conditions.
Well, I chose a couple of charts that are actually intraday charts, but they tie in, I think, beautifully to the long-term perspective of the market. And I think it's really important to use some smaller time frames, because what you can get out of that is a lot of information on how price is behaving and the levels of price that they're trading around. So if we look at this chart, this is a 240-minute chart of the S&P. I've marked in 3 peaks, 1, 2, and 3. And the first thing that we can notice is the downswings that occurred were very large downswings. I think we all remember that. We were all taking our Dramamine. And but if we look now from the October lows, we can see that those swings down are getting smaller.
Yep.
And I want to point out one thing on point 3, the S&P compared to the Dow Jones Industrial and the NASDAQ, it's the only index that has not gotten above that peak yet.
Right.
The Dow actually got above it last November, and the NASDAQ has recently gotten above it. So I think that's very interesting. I've put in, I do think that the market has a really good chance of getting first up to a little bit above 4,300.
Okay.
I've drawn in a couple of high to lows with Fibonacci retracements, and there's some clustering going on around there just above 4,300, and those can kind of tend to act as magnets. So I think that the market is going to get up and be testing that. And I think the way that it gets up there is going to be important to monitor. Because if we start to see long bars and we start to see some momentum coming in, then I think we can start looking for potentially 4,500 level. And again, there's more clustering. We have retracements from peak 1 and 2 there. And there's also a Fibonacci extension ratio from the high of 3 down to the low in October. And we just take that length, multiply it by 1.27, add it to the low, and that gives us the projection up. So there's quite a bit of clustering up there too. But again, once we get to the 4,300 level, I think that's going to give us some information on where we go from there. But if we can go to the next chart, let's look at some more detail.
Okay, and this is your hourly chart now.
This is an hourly chart. So this allows us to really get in there and look at the nuts and bolts of how price has been behaving. And it's gone into this very large range from last late March, April. And it's just been testing up and down, up and down. Well, when you start to get into these kinds of ranges, what eventually happens is they start to form smaller ranges, smaller coils. So coils within a coil.
Yeah.
Those are the areas you want to start really watching for. Those are when that range starts to get a little more mature and it's getting ready for a breakout.
Okay.
So we have the highs and the lows marked in. That coil that's in the right where your arrow is with the kind of pinkish lines drawn around it, the market spent a lot of time around that 4130-ish to 50-ish level. And now it's moved away from that. And the dip that we had yesterday, on the right-hand side of the chart, I've drawn in it's called an AB equals CD pattern. So the high, we have a swing down, a retracement up, and then another leg down that's about equal. It can extend a bit from the first leg, and that's a buy pattern. So the market completed that buy pattern at the 50% retracement from that low, and it's done well moving up from that level, and today it's moved off it quite nicely. So now that detail tells us that the low of that pattern is going to be a support area to watch. We don't want to see that break right now in order for that to move up to 4,300.
Interesting. Okay. It's fascinating. You've somehow given this market a lot more structure than it feels like. It feels like such a volatile, uncertain market. But when you look at the different time frames, you see there's actually a rhythm to it that maybe not as easy to perceive moment to moment, right? In terms of the fluctuations.
No, but it gives traders and investors a method in order to sort of see the quality of price movement in either direction.
Right.
And it can also let us see patterns to enter in a direction earlier than what we could just monitoring daily or weekly or monthly charts.
I love it. Let's continue on. I want to talk about Intel. Intel is one of the semiconductor names that's been lagging behind. Semiconductors have done very well. Intel not as much, but maybe some signs of life here for Intel.
I think that if we hooked it up to an EKG, it's starting to show some signs.
We're still alive here. All right, what's the take here?
Intel had been in a long-term, multi-year sideways range,
right?
And that blue line is where it finally broke to the to the downside,
right.
had a fall, and now it's in a sideways ranging type of a pattern.
Okay.
And again, I'm seeing AB equals CD buy patterns. And just recently, the last couple of days on the far right side, there was a AB equals CD that completed right at the center of that range. And those center areas are important because that's where the price tends to come down and retest, and then that's where it's going to move away from. So currently Intel is moving away from that center line, and so the upper price swing is where we want to see it go to continue moving up. If it breaks that high, then I think we're going to be moving back up towards that gap area and back up, retesting that broken support, which is now resistance, and then we'll monitor it from there. So it's just a way, again, a method of monitoring the price levels and trying to find direction early.
Yeah, if we could zoom in here to the ABCD pattern you've mentioned a couple times here, can you just share for those that are not familiar, what exactly is that pattern? How do you think of it as and why does that? What does that tell you about the conditions here?
This pattern, the AB equals CD pattern, is a pattern that H.M. Gartley actually described in 1935. Right. Although he never called it an AB equals CD pattern. Okay. That was done later by Larry Pesavento. But this pattern can either be a retracement pattern in a trend, or they're also found in ranges, such as this example where price is testing up and down. In this example, we have the AB leg, a swing down. We have a retracement back up, does not exceed A, and then another swing down, which is the D and the completion point. So within ranges, these are tradable to be trading between the highs and the lows of the range. Sometimes, again, they can give us an early direction. And since I'm not seeing sell patterns within this range right now, I'm just seeing the buy patterns. And so I've got a trend line drawn from the high of Intel down to across the tops there and down. And so that's going to be a good gauge to watch also. If Intel can break that trend line, then I'd be looking for more upside to those levels I just mentioned.
Break out of this congestion area, follow through with a break above the trend. I always take something away when we talk, Leslie, and this time it's the 50%, it's the midpoint of those ranges. It's actually really helpful.
It really is.
Interesting.
If you add one more thing into your technical analysis, add that center line. Now we know from the way that range is formed that those lows are super important. Right. Do not want to see those break for Intel to stay bullish right now.
So just to finish off here, you brought a chart of Coinbase. Coinbase have sort of been languishing for a little while here. Cryptocurrencies have come back into their own potentially in 2023. What's the take here on the chart of Coin?
Well, Coin does not have a lot of historical data to it. It was an IPO in 2021. And it did what a lot of IPOs do. They got a lot of excitement around them coming out, and then it's like a balloon bursting. And it, then that balloon just lays on the ground until somebody picks it up.
Here we are.
But I do see, again, signs of life in Coin. It's in this very large range. I've got some areas mapped out of resistance and support, and the three dash pink lines, the center one is the center of the range. And you can easily see on this chart how that price keeps coming back to that price level. So that's the level the market is going to move away from. And it formed an AB equals CD buy pattern that completed, and now it's formed another little small coil. So that coil, I think, is going to give us the direction up or down. I would not want to see the lows of that little coil break at this point, and especially the lows of the ABCD pattern. But the way the RSI is positioned on this particular chart, it's looking more bullish to me than is bearish. That's also in a coil. So if the price moves to the upside, we want to see that RSI move to the upside with it. If it breaks the bottom end of that range, then it's it's not going to be good news for coin.
Right. So watch the lower end of the range for sure. That's such a brilliant illustration, and I'm thinking about basing patterns. I often talk about basing patterns on the show and in my work. You're making me think a little bit about just how to actually measure the performance within those bases. It's actually really interesting, Leslie. We have to leave it there. This was such a pleasure to have you in the studio. Thanks for coming in person.
Thank you so much.
And thank you for sharing some of these charts with us. I appreciate it.
Thank you.
That's Leslie Jouflas. Leslie's the founder of Trading Live Online, coming to us live here in our Redmond studio, based in the Seattle area. It is fantastic to celebrate some of our local Seattle technical analysts. There's a thriving community, but Leslie, very much worth the price of admission to monitor her and some of her work. I love that take about thinking about bases and the performance within them. We need to wrap the show, folks, and go to the 3 and 3. Let's talk about 3 charts in 3 minutes that tell the story of this market environment. Chart number 1, we talked during our market recap about the challenges of breadth, and we talked many moons now about the market rallying, but the breadth conditions becoming less and less constructive. In the last month, in the month of May, it's really become exaggerated, with the NASDAQ 100 leading the way higher, pushing ever upward, while the S&P just starting to break out above resistance potentially, while the breadth conditions all going down. Now, can the market go higher on weaker breadth? Of course, and we're actually seeing that just recently in the month of May. My concern is when the generals continue to do all of the heavy lifting, at some point, either the privates, the infantry have to start participating, or something breaks about this, right? And there has to be this recognition that there's not an agreement, and a lot of stocks underperforming can be a challenge. The advanced decline line on the small cap index, by the way, just made a new low for the year today, and that is not a bullish development. Chart number 2, I love Leslie Jouflas' take on a number of different things, price pattern related, but particularly talking about Intel, one of the semiconductor names that's been struggling. Other areas of the semiconductor space have actually done very, very well. Certainly one of the strongest places year to date in 2023. When I'm looking at the chart of ON Semiconductor, this is one of the many names having a decent day today, up another 5% today. What's interesting about the chart of ON is looking at the trend overall, not just today's move. Did we get above resistance? But what's the trajectory of the overall trend? And when I take a step back and look at the last year and a half, the last 2 years, I'm seeing what I would probably describe as a consolidation pattern that's resolving to the upside. What's interesting to me is that the relative strength is improving, and the RSI, my favorite measure of momentum, is remaining above 50. Those are sort of bullish configurations for sure. As long as we continue to push higher, as long as we're above 2 upward sloping moving averages, as long as the momentum stays constructive, things overall are probably pretty good. I'm also looking to see if we get any sort of divergences. And when you have a chart making a nice move to the upside, I'm always looking for new highs on weaker momentum. I'm not sure if that's how this is going to end up, but I'm certainly watching ON and others for that same sort of development. Finally, I just want to finish off with the energy sector, the XLE. I highlighted in my market recap some of the energy stocks bouncing back to the upside today. SLB, Halliburton, a number of others having a decent day, but let's put it into proper context. What's happened over time with the energy sector? I was talking last week with Doug Bush on the show here, and we were talking about some of the ways we could identify a potential mean reversion move to the upside. When I'm looking at the chart of the XLE today, I'm focusing in on the March low. I'm noticing we're just above that level. It's right around $75 on the XLE. Now, can we have a day like today that continues? Do we have more days like today? Do we get a bit of a mean reversion, a double bottom of sorts for some of these charts? The XLE not as exaggerated, not as clear of a bullish divergence, but you certainly saw that in some of the individual stocks within the energy sector. What's interesting about the XLE, I would say as well, is the fact that the relative strength has been so negative. So the things that start to make this chart look from being a consistent underperformer to something with process, or something with promise. Number one, we make a higher low. We may be doing that. That's why I think 75 is an important level to watch. That's something I set an alert for to see if we hold that. Does the momentum start to improve? We're remaining below 50 on the RSI. Can we get back above there? The relative strength has been going down. Now, honestly, most sectors have had negative relative strength except for tech and communication services. Do we get a turn higher? If and when you see those three things happen, energy may be a good opportunity. A day like today makes me think there might be some opportunity for that to come at some point soon. Folks, that's a wrap for this show. Thank you so much for joining us every weekday after the close for the Final Bar. Special thank you to Leslie Jouflas of Trading Live Online, joining us live in the studio here in Redmond, Washington. All of our previous interviews are at StockChartsTV.com. For StockCharts in Redmond, Washington, I'm Dave Keller. Have a great night. We'll see you again soon.